Hey everyone, is Kenny Coins from Marathon Money, and I have the opportunity to be here with Derek Miller. Derek is been on the podcast before. I think we have great energy when he's come on here. So I'll let Derek introduce himself some more for the people that don't know him yet.
All right. Hey, everybody. Derek Miller. I run a company called Promethean Investing. I've been doing this for 25 years in several different capacities as a financial advisor, as an investment advisor. And there is a difference there. I worked for some of the biggest firms on Wall Street, dealt with thousands of clients' accounts, looked over 1,000 different lives and 1,000 different scenarios. So I know how things can go wrong and how things can go right. And I am always trying to help people have mental, physical wellness and health. And some of that starts with your financial health. And so that's like my goal. I'm big into fitness. I grew up a wrestler and I CrossFit and exercise. And one of the things that affects most people nowadays that they probably don't even realize is their finances and the stress that causes. And then the physical effect of that stress from your finances. So I'm trying to help people get a good handle on finances and investments. And so that's my mission at the moment.
And I just want to quickly, before we get into it, on Marathon Money Plus, please go on the website, check it out. I'm also going to have a discount code that Derek's going to give me that he does for beginning investors or wherever you at. But check him out, check his platform. I think what he's doing and his knowledge and experience can definitely help a tremendous amount of people. But Derek, first thing I want to bring up, Trump won the election. The market, it's up. Tesla is going crazy. Meta's going crazy. Coinbase is going crazy. Bitcoin's almost to 100,000.
Right.
Ta. A lot.
Bang. So listen, the market's excited after the election. Let me bring. So I don't know if you guys have talked about this or not on the podcast, but the one thing you have to realize when you talk about elections is what typically happens before an election and what typically happens after an election, and then what also follows, like the direct occurrence after an election. So typically before an election, because it is an event, right? It's a risk event. It's labeled as a risk event. That is typically when you you'll have choppiness, you'll have markets going down, markets going up. Truth be told, we didn't have a lot of that before the election, which was amazing. I mean, the most you got out of the market before the election was a 4% down move on the Dow. The NASDAQ didn't really do anything, but it barely broke into new highs since 2021. The S&P, you got nothing, and it was already at new highs since 2021. But that is supposed to be your rocky time. We didn't get it. Trump wins. We all wake up in the morning. The Dow's gapped up 3.5%. The NASDAQ's gapped up. The S&P is gapped up, and it's just going gangbusters pretty much ever since. So is this new? Is this a Trump thing? I mean, that's what people keep talking about. This is a Trump thing. And what I want to point out is the last election, and then the election before that, and then the election before that. This isn't a Trump thing. Following an election, you typically have a 10% run. So this isn't new. None of this is new. Now, you couple that with the fact that the Fed cut rates, right? So they cut rates by 50 bips, and I know they cut them again last week by another 25 bips. But after a rate cut, you also have markets that run. There was a lot behind this market for this run to happen. Do I think that it's because of Trump? Not necessarily. Do I even know that it's a good thing? Not necessarily, because when assets like stocks, gold, Bitcoin are running like the way they're running now, which is just gangbusters. And the second it pulls back, everybody grabs more. When things run like that, that almost points to hyperinflation. So if you're a big asset holder, if you have a lot of stocks, if you have a lot of real estate, if you have a lot of Bitcoin, and when I say a lot, I mean meaningful amounts. Great. You love hyperinflation. You're stoked. You're on fire. Anybody else? This isn't really a good thing. I mean, not if in fact that's where it's pointing, right? That's not really a good thing. We don't really want that.
If you're not in the game and you're outside the game, you're 100% right. It's not a good thing.
I mean, I would even say
to be playing.
Yeah, I would even say that you have to be playing in a big way. If you're beginning, so if you're someone who's still strategically saving and investing and those things, if you're still doing that, that still, even you're playing the game technically, but this isn't great for you because you're still looking to save money to invest money. Hyperinflation doesn't just affect stocks and bonds and real estate, as we've seen like out in the real world, right? It takes interest rates to a height that no one can afford a mortgage, which is where we sit right now, right? Nobody can really afford a mortgage because housing prices are up 30% since 2020-ish, right? The interest rates have doubled on a 30-year mortgage. I mean, really, just to get back to an affordability standpoint, you almost have to go back to 2020, which is what, 40% probably? You probably have to drop 40%. You'll need to lose 10% in home prices, or 30% in home prices, and then that remaining 10% would probably come off of interest rates coming down. So there is an issue with hyperinflation. Now, as I've been going through this and talking about this a lot, what I've wondered myself is this pointing to hyperinflation? Because has Trump talked about anything that would lead to hyperinflation? The biggest thing anyone can point to is that he's talking about tariffs on foreign goods coming into the country. That doesn't lead to hyperinflation. So I made me look back further. And what you'll find is after elections, this is really traditional. Having a run like this at 10% is normal. It's probably not pointing to any of those things. It's probably not. And so we'll head into December, and what should happen and what I would see happening heading into December is that we will start to get some tax selling, rebalancing within those portfolios, which is going to probably primarily pull from tech, AI, energy. Those are like your big performers. You're probably going to pull from that. So that's kind of the way I see this playing out. So I guess to answer your question, Kenny, it's exciting and I love it, and it definitely bolsters assets. Is it anything that was really unexpected? I don't think so. And I don't know that it's Trump either.
Man, that's like a whole different point of view. It's like a lot of people believe it's Trump. Now you're saying it's not Trump. And if you look back at the data, you might actually be right.
No, look, just look at the last election, Kenny. Look at the election. You'll see that
still went up.
Well, no, listen, the day following the election, you know how we had a 3% gap up, 2.5%, and a little over 2. Literally the same numbers. And then it just ran. Go look. It ran. So the market was up. The NASDAQ, if I remember, when the NASDAQ started its correction in December of 2021, it was up 100% from the 2020 lows.
Correct.
Just following the election, I think that the NASDAQ was only up about 50% from the lows. So it ran another 50 directly following the election into December 2021, where you had a correction of 35%. And it brought it way back down. So it is, and this is not, that wasn't Trump. I mean, look, it's arguable. And I'll just put it out there. I believe the 2020 election was rigged. I believed it was fixed. I believed it then. I believe it now. And that now there's even more data to prove that I'm correct. Because if you look at the number of Democrats that voted, if you look as far back as 2012, 16, then you go to 20, and now you come into 24, what you'll see in 12 and 16, you'll see the bar basically remain a constant. All of a sudden in 2020, you'll find about 25 million extra voters. Now you come into 2024, it's right back where it was in 2012 and 2016. So we lost 25 million voters from 2020. And also we gained them from 2016. So it does appear as though that election wasn't even legit. So it wasn't even the populace that elected Biden. And still, the day after the election, he got the exact same bump Trump did. And the market ran, at least the NASDAQ, around another 50%. So is it a Trump thing?
You know what? It might not be. I'm honestly starting to think it might not be a Trump thing. It just might be the fact that people just want the election over and they feel uneasy when the election is happening because there is no deciding factor where the country's going. Definitely the last 2 years with Joe Biden being in a state of mind. But even with the high interest rates, the market was still going up. There was still money to be made in the market.
No, I completely agree. I'm sorry, I got sidetracked. My something happened. My wife was taking my son to school. I apologize for the interruption.
No, you're perfectly fine.
Okay. I'm gonna do something. Can I take 1 second, Kenny? I just want to
go ahead.
unlock this door. Okay.
Go ahead.
Just 1 second. 1 second.
Reason why I like this platform, you can pause it. But back to what you were saying. Yeah.
So I think that if you go back and look, those two candidates couldn't have a different view. You could not oppose each other more than a Trump view and a Biden view. And if you have the same result, I know everybody wants to think that it was Trump, but you're right. I think that what happens is that's a big kind of risk event, an election. And when the risk comes off, that just makes people happy. Okay, we now know what's going to happen. We now know how to make the adjustments, right? So if Kamala had been elected, there was one set of things that investment managers would want to do, that people would want to do in reaction. If Trump is elected, it's completely different, right? Because you're going to go in two completely different directions. So with that said,
the bump would still be there if Kamala Harris got elected. They would still go up. The market would still go up. The problem is at this point, we don't really know, because in 2016, when Trump got elected, the market went crazy down in the middle of the night and then shot up. Then the next 4 years, it was crazy. So we seen him. This is the second time, and it has done exactly the same, besides the drop down of the shock that, oh my gosh, Trump is president, whoever would thought. But now it's just like, just right to straight up. Now, quick question. What do you think about Tesla going from 251 the night before the election, and now it's at like 330 from the last time I looked at it? Maybe dipped a little bit.
I think so. I will say two things about that. So the first thing I'll say is that if you own Tesla, of course you're excited. Do I think that Tesla, like a meaningful bolster within the company? Do I think the company gets meaningful? Like, does something happen to the company meaningfully to make it worth that bump? Probably not. Why did Tesla?
No, you're 100. I'm not even gonna say you're 100 correct. Like that move from 251 to 330, 344 was as high. Even today, the high is 344. Actually, the 52-week high is 358.64. They did nothing for that $100 move.
They did nothing for the $100 move, nothing at all. And the fact remains that now there's another question though. So the second point I would make would be this: when Tesla got to its 2021 high, did anything actually happen to elicit a 70% drop?
No, not really.
That's right. So you reverse the question. So you say, okay, so if nothing happened now in order to create this price move up, which is insane, right? It's 50%. The price move up is just about 50% since Trump got elected. Was there anything meaningful that happened in 2021 that made the stock fall 70%? I would personally say no. And so this is what I encourage people to do. So the first thing is, I'm going to bring up those two courses real quick, Kenny. So if you go to my site, prometheaninvesting.com, I have an Invest Like a Pro course. Your coupon code for Marathon Money is MM20. It'll give you 20% off that course. It's 7.5 hours of video tutorial. It's a 70-page workbook, step-by-step with me, just like this. It's not slideshows with me talking over it. It's me just like this, walking you through the process on how to set up a good, valuable financial plan based on a Monte Carlo simulation. I talk about the history of Wall Street. I walk you through Roth IRAs, joint accounts, trust accounts, how they work, which one you should use. I show you how asset allocation works. I show you how that model is used. You can model it yourself, and then you play with it within your financial plan, how to set up an account, how to place a trade. You go from if you know nothing into you know just about everything a financial advisor at any major firm would ever do for you, all within this course. And I can tell you that I don't speak in a manner that you're not going to understand. I could teach a sixth grader this stuff in 2 hours. A sixth grader could build out a financial plan, an asset allocation model, and know if he did this, and this is where he's going to end up, right? And the reason I bring this up in what I'm saying now is because I want everyone to realize that's where you start. If you don't have a plan, and it doesn't matter if you're already placing trades, you don't have a plan, you have to have one. Invest like a pro, PrometheanInvesting.com. Use coupon code MM20. You will not be sorry. I have another course on there, investing, trading, and forecasting like a pro. So it's intermediate trading, investing, and forecasting like a pro as well. The reason I'm bringing this up now, Kenny, is one, to pitch it, but also in a more meaningful way because of my next statement. My next statement is when you asked about Tesla. When people talk about what drives the stock, oftentimes what you'll hear about is their projected earnings or what they missed or what they made or what new technology they're using or how, SMCI is, the number one supplier of chips to NVIDIA. So it's going to drive SMCI, the semiconductor company, like through the roof because NVIDIA is going through the roof. And when you ask me, do I think that what do I think about that price move? This is what I think, Kenny. And this is what I talk about in my forecasting courses. So once you understand the basics, once you've done the work for yourself through a financial plan, and you should do that, the next step is then you should start learning about the sexy stuff. And here's what you're going to find every time. Very rarely does a stock move based on its actual earnings, the result of its earnings, or before its call. I prove that all the time on Twitter. If you don't follow me, it's Derek Invests on Twitter or x.com or whatever you call it. And what I'll show you is how to identify where a price is going to move before earnings are even announced, before something is even announced. And you can do this time and time again. Why? Because the real driver of anything is cash flow. It's simple cash, right? It doesn't matter. It makes no difference what the company does and who they are. That's why companies like Krispy Kreme. When I got into business, Kenny, this is like back in 2006, 2005, 2007. It was somewhere in there. I remember Krispy Kreme. I'm not joking. The donut shop. That was your Peloton. That was your Tesla. Like this thing went crazy. And everybody kept making all these reasons as to why Krispy Kreme was this skyrocketing stock. The fact of the matter is this, and it's even more so true today. The more people that pile into a position, the more people that are adding money, it just bids the price up. And then when the price gets to a certain point and those people are no longer willing to bid it up, they're no longer willing to insert money, prices come tumbling down. Now that we have all this machine trading, this algo trading, this AI trading, I don't necessarily think it's AI. People say that it is. I just think it's machine trading. Now it's just all about what levels do you pop, because everything's working off of ranges, support and resistance. And when these levels get popped, now the algorithm says buy more or sell more. That's why we're getting into these volatility ranges where it's like all of a sudden everything's slow and steady, nothing's really happening, and then swoosh. And if you're in the market and watching every day, right now the down moves, if you'll have a down move in a market like the S&P, the Dow, the Nasdaq, you'll have down moves of 2.5%, like out of nowhere. That stuff just didn't happen before. It took time. So do I think Tesla's move up? Do I think it's valid in terms of a company? No, but if you look at Tesla's chart right now, what I can show you is a massive amount of cash flow, a massive amount of institutional investment, right? So when you see trading activity go through the roof, when you see a ton of trading activity step in, it's not a bunch of guys over at Schwab or Ameritrade or E-Trade. That is an institutional trading desk buying. And for me, and once you get into the sexier like investment aspect of life, when I see institutional desks buying, I buy too. When I see institutional desks selling, I sell too. And that's what that forecasting course is all about.
What institutional are you looking at right now that is buying and selling that you think people need to be aware of?
Cool. That's a great question, by the way. That's a great question because so for me, Kenny, I'm never concerned about which desk it is. Like, I don't care. There's like the JP Morgan caller event that takes place. Like Goldman has a desk, Merrill Lynch has a desk, Bank of America. I never care what desk is doing what. A lot of people want those details. And if you do, there's like a million places you can find them. For me personally, I'm not that kind of detail-oriented guy where I go, who actually made the trade? Because all I want to know is that the trade took place. And I'm a simple guy, right? I'm an easy guy. So if I pull up a chart on anything, and we could do, and at some point, maybe we could do that and we'll walk through something, Kenny. But if I pull up a chart and I see that volume is up 300% in a week. So regardless of, I don't need to know anything else. I see that volume on a chart has gone up 300%. Maybe it's an individual position. Worst case, it's an index, because if it's an index, that means we're headed for a large correction. You know, right there, there's your signal. There's your shot across the bow.
When you see a large volume in the index, it's always the number one or number two indicator to being a correction is coming.
A big correction, not a little one, not 5%, not 10%. You start to see things. If for any of you guys listening out there, if you are familiar with looking at charts, just pull up the Dow. It's the most expressive chart there is right now.
Yeah,
pull up the Dow chart, put it on a weekly time frame, put it up on a weekly time frame, and look at December of 2021. Look at January of 2022. That is exactly what I'm talking about. I show people that every day. You can break it down into time frames, but if you see that, and that's January of 2022, that's really before the market even started moving down, right? Maybe it was down 5%, maybe it was down 4%, and the NASDAQ came down another 35 to follow that. You can find the same volume on the NASDAQ, you can find the same volume on the S&P.
What day you said it was?
It's, I believe it's the week of in January. You won't miss it. January of 2022. Pull up the Dow DIA.
Actually, no, January
2022.
Yeah,
and pull up the ETFs, because that's where volume is easier to digest. That gives you an idea of actual trading. Whereas like the SPX,
what ETF would you advise everybody to look at?
If you're looking at ETFs, everybody, the one that's going to be the most pronounced is going to be DIA. Okay, that's the Dow Jones Industrial Average, DIA.
What about the S&P?
The S&P is SPY, and the NASDAQ is QQQ. You will not miss it. If you pull up a weekly chart, it's January of 2022, you will see a giant bar standing out. And that giant bar is almost 500%, somewhere between 500 and 750% increase in volume in 1 week. Now, this reoccurs over and over and over and over again every time we go into a major bear market.
Oh, I see.
So the one thing that you must see before any bear market will begin is institutional selling, large selling of institutions. Why? Because they are the people invested in the market movements on a daily basis. So on a daily basis, they care. On a daily basis, they have to make money. Because of that, you need their activity to drive a major correction. And a lot of people out there, Kenny, that's all they need to look at. Everybody gets so caught up in this micro stuff. The reality is this: if you own stocks and it's any somewhat diversified, you own somewhat diversified stocks. If you're in a bull market and it's just going through the standard cycle of, 0 to 8% drawdowns, then it rallies back up. You don't really need to pay that much attention as long as you're dollar cost averaging. If you're dollar cost averaging in, meaning you're putting money in every month, you don't really care about 8 and 10% drops, and you shouldn't. You should keep buying. What you should care about are the big ones. I don't care who you are. What you should care about is the big ones. Don't fool yourself into thinking that you trade like Warren Buffett, because you don't.
You don't.
Right.
You're 100% right. And I want to talk about some charts that I saw, and I wanted to get your opinions on it. Like, if you look at a lot of these charts, there's a lot of gap ups, definitely from the last week. Like if you look at Spotify just this year alone in the last 52 weeks, from $170 at the low to 462. You're talking about 200% up. Coinbase, $89 to 334. I'm in Coinbase. Apple, 164 to 237. Meta's probably one of the 279 to 596. There's a lot of companies that are just 150% up, 250% up, just doing crazy. But from what I'm hearing you saying, that there might be tax reshuffling. It might be a
There will
selling
be.
period.
There will be. So let's talk about what's going on in the market right now that is beyond the election. What could be a driver, that a real driver of cash into a market right now? So all markets operate the same. They operate on supply and they operate on demand, right? So right now we're in a corporate buyback season. Corporate buyback season, for anybody who doesn't know, is nothing more than a publicly traded company going in and buying back their own stock. Now let's explain what that means, because this will help with some of the drivers of the market right now. If I own ABC and I have 100 shares outstanding of ABC, and I have this demand that remains a constant. So I have 100 people that want to own ABC. I have 100 shares of ABC. And me, the company, I come in, I say, you know what? I'm going to take 50 of those shares back at the current $50 price. I'm taking them back. Now I own them. I still have 100 people that want to buy shares of ABC, only there's now 50 shares. So I just double demand. Yeah. I double demand. Oh, Kenny, I can't hear you.
I said what you're talking about increases the value of the shares, because what you're getting at is they buy it back from the public market, then cancels those shares, reduces the total numbers of the shares outstanding, which rewards the shareholders, which is increased the value. So for example, if you had 100 shares, now it's 50. Now it's like 50. Now those 50s are worth maybe 0.1 times more than what you previously had.
I mean, it's quite possible. Really, what it's about is if you still have these same 100 people that love the stock, now you only
Yeah.
have 50 shares of it, they're going to bid that stock up. So
correct.
You artificially increase demand. Those 100 people are absolutely on fire about it. I bought it at $50. Now check it out. There's another piece of the puzzle here. So I got these 100 people in a fervor now, right? They're going nuts. They want this stuff, and they go, we don't have any of it. So guess what I do? I'll sell it back to you. You'll put it back in the open market. Only this time you'll put it out 10 shares at a time, which further drives the price up. So we're in that environment right now. We're in the largest corporate buyback season right now. So that's happening right now. So there's something that's driving price. You brought up Spotify, and we'll have to go through at some point and share screens. But I looked at Spotify just real quickly. And what I want anyone who's looking at Spotify, and I can walk through every company you just said if you like, but what I want you to look at is I want you to pull up a daily chart of Spotify. You tell me how many times Spotify has gapped up the way it is right now, and it hasn't reversed to fill that gap. Filling the gap, meaning the price hasn't come back to where it took off from. Tell me if you pull up a daily chart, how many times has that happened?
Not quite often.
I can't find any going back to June of 23. Let me go back further. None. There's one back here. What's this? It doesn't look like price ever made it back. I can find one real quickly in January of 23. Outside of that, I don't find any. Okay. And that is down at $100. So you're now at 456. If you look back to the last time they gapped this stock up, what do you know? It was on earnings, just like this time. They gapped it up. It went up for what? 1, 2, 3, 4, 5, 6, 7, 8. And on the 9th day, it swung all the way down to where it took off from. And then it's rallied again. So with that, looking at Spotify, I think anybody would assume that gap's going to fill. I always tell folks the gaps that you can 99.9% of the time that fill are indexes, because indexes represent everything that institutions are invested in. An institution's job is to buy as cheap as they can and sell it for as much as they can. So gaps take away profitability from the people that run the markets. So gaps and indexes don't happen. I mean, rarely are they not filled. Very, very rarely are gaps and indexes not filled. As far as companies, there are certain companies, they leave gaps wide open and they just continue to run. So when you're looking at individuals, it's a possibility.
One question I know a lot of people's going to want to know: do you believe in gap retracement, a gap up or a gap down, and it retraces it? I think it happens between 60 to 80% of the time. The gap will get retraced.
It depends on what we're talking about. So if we talk about an index, I would say it's 99.9% of the time. I would say it's almost always. If you're talking, if you break it down into a sector, I would say it's probably somewhere around 85-90% of the time. If you break it down to an industry, I would say it's probably 75 to 80% of the time. If you break it down to a company, I have to look at the company itself. Because if you break it down to company, I could almost say it's a coin flip. And it depends on what companies you're looking at. Like if you're looking at the Magnificent Seven, like right now, because there is so much investment in those seven companies right now, and they have become such mega caps, they are not very different from an index in the sense that every large trading desk owns some. I would say those companies, you could almost lump that in with the 99.9%. I can't find a lot of like if we were to look at, you mentioned what Meta, because I mean you're mentioning everything that's going nuts right now. So primarily tech. Meta doesn't really have.
Tech alone is going crazy.
It's going crazy. Let me pull up Tesla, because Tesla was synonymous with filling its gaps before. Now you have this, and also I'll add something to this Tesla conversation. And I think everyone should be aware of this fact. It's heading back to those highs in 2021 when, as a financial advisor, so I have this weird kind of dichotomy that goes on with me. I am a financial advisor. I was one for 20 years, like a direct financial advisor, but I'm also an investment advisor. And those are two very different things. So they kind of blend sometimes. And with Tesla, you need to be a realist. You need to be a realist about what it's done and what has happened. If I were looking at Tesla right now, would I be focused on gaps or volume or cash flow or who won the election? I wouldn't be. I would say, look, the market has dropped since 2021, right? Like it had this market drop of 35%. Everything else is much, much, much higher than that point, right? Of 2021, whatever you want to call it, January of 2022. Tesla's a weak company. There's competition now. Everybody has an electric vehicle. Elon Musk, I mean, the greatest thing about the guy is that he's an influencer and everybody loves him. That'll carry a company so far. But at a certain point, does Tesla, the company, because that's where we are now. So stocks have these times of high excitement and fervor, and they're new and they're doing something new. NVIDIA is experiencing that right now. And when that dies, I remember when Peloton did it, we were in COVID, Peloton did it, and everybody goes crazy about it. Then it will retrace most of its parabolic move. Most of its straight up move will get retraced. And now you have to start evaluating the company itself. And that's the financial advisor me. If I were looking at Tesla right now, I wouldn't care about it.
No, I hear you. You're completely right, man. I'm only in the Tesla because of price movement.
Right.
We got about like 5 more minutes, and I do want to ask you about these two things, and I think everybody's gonna want to know. Number one, I know the second one's gonna be a lot longer. Costco. What do you think about Costco?
Costco. Let me take a look. This is the first one. Let's take a look.
I want to hear your opinion about the company itself and about the stock, because I think their idea of a membership is phenomenal and their business model is phenomenal. The stock has been I've been in the stock since like 700.
Okay. Can I ask you one kind of kickback, one question to you? When you said you love their business model, aside from the subscription service end of it, what do you love about their business model?
They make it seem like you have to be involved. Like
I dig that.
To be there, and they have everything, and everything's in bulk. Like there is this mentality us as humans have. We love everything big. We love everything in bulk. We have this mentality as humans, majority as Americans, like, well, they said they'll give me 5 for $2. And you tell me when you go to the store and you see something 3 for $5, you're telling me like, I only need one, but I'm gonna get all 5.
100%.
100%. You do it every 80 to 90% of the time you're doing that. Because you know what? It's more. And even if it's a lesser product, you're always gonna get the one that gives you more.
Right.
It might not be directly the product you want, but and Costco has mastered that to the highest level.
I completely agree. I love what you're saying. I would add one more thing. So my opinion on Costco as a company is I love the company. I love the company not just for those benefits, which those benefits are immense in themselves because their entire strategy makes perfect sense. I love that. Their subscription service makes perfect sense because that allows them to play with the price of the things that they're selling, which brings me to my next point. Why I really love Costco, and I learned this not too long ago, is that depending on where they're located, their prices can drop. So what they sell things at. So if they go into a more depressed area, if they go into an economically struggling area, they bring their prices down. They're able to do that because they have that subscription service. And so for me, I just go, wow, like a company actually trying to help someone. And they're not doing it just with their words. They're not just saying we do this. They do it. I know it. I have a Costco that is 5 miles from me in one direction. I have a Costco that's 6 miles from me in another direction. And just like in kind of any major city, if you go to the Costco that is in like an economically depressed area, everything is cheaper. It's no joke. They're 1 mile difference from me, and the prices are very different. And they're able to do that through their subscription service. They don't abandon their warehouses like a Walmart does. They just don't leave all these people unemployed. Right? They pay well. They offer benefits. I like Costco. Let me just tell you, I like Costco as a company, and as a stock. I can't see how it goes wrong from here. I like it.
It can't go wrong. Costco is an amazing company. I did not know that. That is brand new information that makes you want to support a company like that.
Right. And
I think that's amazing. The last question. I don't know, how do you feel about Bitcoin?
Oh, Bitcoin. Well, that is a long answer, but I'll shorten it so that it doesn't become this like extemporaneous, like just this long, drawn out, blah, 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 blah kind of thing. Okay, so first, let me just say that Bitcoin is the solution to our currency issue. So I like Bitcoin. Long term, Bitcoin, if you don't have it, you should. It should be a part of what you're doing. Now, there's some caveats to that, okay? So why is Bitcoin what it is? It's simple, and I'll just sum it up very quickly. The U.S. became the world reserve currency back in the 40s. All right. We went on to the gold standard. Gold is a mineral. There's only so much of it. At that time, we owned about 15% of the world's gold. We jump forward to 1974. When I say we own, I mean the U.S. owned about 15% of the world's gold. Fast forward to 74. The U.S. owns 75% of the world's gold. And here's the problem. Here's where we ran into a problem. Everyone wonders why we went fiat currency, meaning based on nothing. Why did we decide that our currency should be based on nothing? As the world grew, people needed to do business. So new countries come into play, new businesses come into play, new industries come into play. We didn't have any more money. We were tied to a mineral that we couldn't get any more of. We were tied to a metal that we couldn't get any more of. So we said, shoot, what do we do? Uncouple us from gold. That's what you do. Just uncouple us. Now there's nothing else that can hold us back. We can print as much money as we want. Unintended consequence. The government can spend whatever the heck they want. They can drive us straight into poverty. They can hire as many people as they want. There's no handcuffs. They just print. Brings us to today, or brings us to probably about a decade ago, where everybody kind of saw this already happening, because as the interest on our debt grows, we can't even, at this point, the U.S. can't even serve its debt interest. Now, is this some big deal? Is this something that we should be fearful of or terrified of? No. The rest of the world's in the same position. The same thing has happened with their debt. The same things happen with their currency. But we do have a problem, because we can't go on like this. Soon enough, a loaf of bread is going to cost $2,000, right? And if incomes don't increase with inflation, if your income doesn't increase with increased prices, which it hasn't, since 2021, the average median income in the U.S. has dropped and prices are through the roof. And that's a fact. So what do? Well, the powers that be saw this coming, as they should, and they invented Bitcoin. What is Bitcoin? Bitcoin is your gold. Bitcoin isn't the currency, right? Bitcoin is the gold standard. So the US dollar tied to gold. Now, Bitcoin is the gold in that scenario. Why is Bitcoin favorable to what we're doing right now? Well, because we can mine it, but it takes a lot of energy to mine it. So we can't mine it just through the roof. So it does a couple of things. It allows the world to keep growing. You can always create more currency. The currency will obviously come on top of Bitcoin. That's what all the coins are, right? So all the coins are your currencies. And so your coins are what you transact with, your Bitcoin's your gold. Well, you can mine for this gold of Bitcoin forever. And also, you can't just mine as much as you want because it takes a lot of energy. So we can always increase the amount of currency, which is essential in today's world. So if this is all the case, if everything I said were true, and historically I can tell you everything I told you about the dollar is true, Bitcoin, this is what I believe to be true. I don't see another avenue that will create a solution as good as Bitcoin creates. So because of that fact, I think that Bitcoin is a great investment. Let me add one caveat. Right now, there's no regulations over there. It's running wild, right? In 2000, it went from 0 to 20,000 in 2018. It fell back down to 2,000. Then it rallied to 60,000, a little over 60,000. Then it fell back down to 17,000. Now we're up at 90,000. You can't have that kind of swing in a currency that you're trying to transact business and your life within. So there are going to have to be, in one way or another, and I don't know how it all pans out, you're going to have to be able to handcuff the large holders of Bitcoin where they can't just unload it onto the market and then pull it back from the market. Like we just talked about corporate buybacks, creating artificial demand. That is how trading desks control the price of a stock. That is how Bitcoin holders are able to control the price of Bitcoin. If people don't think that that price is being played with, they don't understand what they're talking about, because you can't take prices from 60 some thousand, I think it was 62,000, down to 17,000 without the guys that have most of it being more than involved. Like they're running the show. So
they're running the show. And I always said that. This is somebody
100%.
just on offloading and unloading whenever and when they want.
100%. And so you have to be aware of that fact. So if I just gave you, we were talking about behavior with Spotify. I can't find on Spotify where it doesn't fill those gaps, where those gaps don't retrace. So on Spotify, I would believe in gaps, right? If I were looking at Bitcoin going from 0 to 22,000, then down to 2,000, then up to 62,000, 63,000, then down to 17,000, now up to 90,000, I'm just going to use logic and say that until something changes, this is how this asset performs. So if that's the case, am I a buyer at 90,000? No, I'm not a buyer at 90,000. If you go, it retraces somewhere between 80 and 90%, and then it takes off again. So if I'm looking at it now, if it retraced to 17, it's gained 30% from 60 to 90, right? It's gained 30% since the last fall. Then I'm going to say I'm probably a buyer at 34. And this isn't like I'm not doing anything mystical. I didn't even pull up a chart.
It's patterns.
It's just a pattern. It's what's happening now. I do believe that something will have to fundamentally change, not how you value Bitcoin. I don't believe that changes. That's the hidden gem.
It's going to be the barriers that keeps the coin in line.
And honestly, we need them. We need them because those types of swings, like for someone to come on and say, "Oh no, that's just how it operates." No, there's guys making trillions as that's going on. And then there's young people that are just bailing out because the 10,000 they have, they see fall to 2,000 and they just go, I can't lose the last 2,000. And they just yank. That's not right. Right. And the beautiful thing, not just in Bitcoin. So even in regular markets, everybody talks about dark pools, or that's all BS. You can find any transaction. Just like in Bitcoin, you can find any transaction. In Bitcoin, it's actually easier. So you can identify, you go, hey, look, that guy just sold 1 million. And it's like, but nobody can do anything about it. He's allowed.
100% allowed.
Yeah.
100% allowed.
So that's my opinion.
Yeah. So, but man, I really thank you for your time, man. I really appreciate it.
Absolutely.
Guys, this is Marathon Money. Derek Miller. I'll have his stuff on the website. I have the discount code. Check them out. I know you got a YouTube, right?
I do. I have a YouTube. I have social media everywhere, right?
Yeah.